Bitcoin just got absolutely tariff slapped. Bitcoin tanked after President Trump's announcement to hike global tariffs to 15%. Meanwhile, the fearmongers are screaming, bear market confirmed, bear market confirmed. Right now, Bitcoin sits around $66,000. That's down 26% year to date. But that's nearly 47% off of its all-time high back in October of 125K. The 4-year crowd is calling for 50K. And the perma bears, well, they're celebrating. Everybody watching the chart is feeling the same question in their gut. Is 2026 over before it even started? Emotions, this is Beyond Bitcoin. Let's dive in. As I mentioned, Bitcoin just got tariff slapped. President Trump raised global tariffs to 15% and Bitcoin dropped 5% in one day. Bitcoin is hitting prices we haven't seen in years, which has led me to having a few uncomfortable conversations with my wife. I said it's going up. Yes, it will. I promise. It's going up. But here's the thing nobody's talking about. The new tariffs are legally fragile. They expire in 150 days. And while everyone was panicking, Saylor and others continued to accumulate. I mean, what do you think? It's Saylor. Saylor recently completed his 100th purchase of Bitcoin. Yay, 100. Woohoo. Way to go, Michael Saylor, for another Bitcoin purchase. On the same day, Bitcoin dipped below 65,000. And this leads us to one important question. Do you think Saylor will throw another 100K party this year? Or will it just be a 50K party, with half the guests? No wonder why I didn't get invited last time. This actually leads us to one important question, which is 2026 already over? Is the bull run we were expecting not coming? But before I answer that, let's break down the tariff story everyone's confused about. Understanding this is the key to understanding where markets are headed for the rest of 2026. And on Friday, the Supreme Court ruled 6-3 that Trump's sweeping IEEPA tariffs were illegal. The big ones, the country-specific tariffs. Some as high as 50% gone. The court killed them. So what did Trump do? He fired back within a few hours, probably sent a couple tweets. He signed a new executive order under Section 122 of the Trade Act of 1974, a 10% global tariff, then raised it to 15% the next day. 15% is the legal maximum under Section 122. He literally hit the ceiling. Bitcoin fell 5%. It hit 64,000. The bear market confirmed crowd came out swinging. But here's what they missed. Section 122 tariffs have a 150-day clock. They're temporary by law. And they're already facing legal challenges. This is not a structural reset of global trade. This is a policy grenade that expires in about 5 months.
That doesn't change. I think, if you listen to people, someone will say, well, this weekend there might be some problem in Iran or in the Middle East. And if there is a problem in the Middle East, and if the U.S. does something with regard to Iran, then Bitcoin's the only thing you can sell. And then Bitcoin price may crash and we're worried about it. And I'll say, well, if something happens in the Middle East, Bitcoin will be the only thing you can sell. It'll also be the only thing you can buy. And so that just means that a lot of people that want to trade on the weekend are transferring capital to crypto exchanges so that they can either buy or sell, buy, sell, and buy Bitcoin 4 times between Friday at 4 p.m. and Monday morning at 9:30 a.m. And yeah, if you're a trader, what does that make this? It makes it the most interesting asset in the world for you.
While the panic was overblown, Saylor just hit what he's calling the orange century.
So you have a world which is not served well by the 20th century conventional finance assets and finance structures and finance ideologies and finance protocols. You have a new world, a digital world with digital protocols, digital assets, digital capital, digital credit, digital money. Is it going to solve all the problems? No. There's going to be a lot of problems in the world that we're not solving with digital money, digital credit, and digital capital. However, walk down the street and ask 100 people whether or not they'd like more money. Every one of them is going to say, I'd like more money.
Saylor didn't hit no bell, and neither did I. Now let's cover the fear and greed index that just hit 5. 5. 5! That's 5 out of 100. That sounds more like my high school math scores. That is the lowest reading in its entire recorded history, lower than COVID, lower than FTX, lower than when Mike Novogratz regretfully got that Luna tattoo before its collapse. And every single time this index has hit extreme lows, the people who held or bought came out of the other side very, very rich.
If you buy a farm, do you get a quote next week? Do you get a quote next month? If you buy an apartment house, do you get a quote next week or month? No, you look at the apartment house or the farm and you say, I expected it to produce so many bushels of soybeans and corn, and if it does that, it meets my expectations. But they buy a stock and they think if it goes up, it's wonderful, and if it goes down, it's bad. We think just the opposite. When it goes down, we love it because we'll buy more, and if it goes up, it kills us to buy more. And Ben Graham wrote about it. It's been explained. But if you can't get yourself in that mental attitude, you're going to be scared whenever everybody else is scared. And to expect somebody else to tell you when to buy and therefore get your courage back up or something. I could get this fellow's courage up substantially by saying it's a wonderful time to buy. And then a week from now, he'd run into somebody else that tells him the world is coming to an end.
Remember, tariffs are inflationary. The dollar is already at a 4-year low. Gold is at all-time highs. And JP Morgan, yes, that JP Morgan just called Bitcoin at 165,000 by the end of the year. The debasement trade isn't coming, it's already here. And then there's Saylor. On the same day all this chaos was playing out, Strategy, formerly MicroStrategy, completed its 100th consecutive Bitcoin purchase, 592 Bitcoin. That's about $40 million of Bitcoin at 67,286 per coin. Strategy now holds 717,722 Bitcoin. That is 3.4% of all the Bitcoin that will ever exist. Saylor is technically down from his average. His average purchase price is around $76,000. He's sitting on a drawdown, and he bought more for the 100th time in a row. Let that sink in for all you trying to HODL and accumulate. And this is the line that matters. 4 words. Saylor posted it on X. There are no tariffs on Bitcoin. Is that 4 words? I don't think that's 4 words. Steel can be tariffed. Wheat can be tariffed. Semiconductors can be tariffed. But you cannot put a custom checkpoint on a peer-to-peer network. Bitcoin doesn't care about borders. It doesn't ask for permission. There's no dock it arrives at. No port to inspect it. No import duty. You send it and it arrives. Every country that puts up trade walls makes the argument for Bitcoin stronger, not weaker. This is Saylor a week ago on Fox Business. He called it a crypto winter, but listen to what comes next.
We are in a crypto winter. This is the 5th major drawdown of Bitcoin in the 5 years since I've been in the marketplace. This is a much milder winter than previous winters. It'll be shorter than previous winters. It's going to be followed by a spring and then a glorious summer. So don't fear.
Why do you feel so confident saying that?
The banking sector is supporting Bitcoin much more strongly today than we were 4 years ago. We've got the formation of digital credit networks, banking credit networks. We've got the support of the administration. We've got a Bitcoin president. We've got 12 cabinet members that are pro-digital assets and pro-innovation. And every single month, you see new advances in the digital asset space, which are bringing extraordinary productivity to the economy and a lot of capital to the asset class.
It's a winter milder than 2022, spring, then glorious summer. That's a man who holds 717,000 Bitcoin talking. And he's buying more at the same time that he's saying it. That's not a hedge, that's conviction. And by the way, let me remind you, Strategy cannot be liquidated until Bitcoin hits $8,000 per coin. That's it. They confirmed it publicly, $8,000. While the panic crowd is screaming about 50K as if it were the end of Strategy, it doesn't even come close. Real quick, if you've been watching this channel, you know I'm serious about being prepared, right? And our partners at sat123.com are serious about being prepared too. Probably a little bit more than I am. These guys carry premium survival gear, the kind you actually want when things get weird out there. And right now, with tariffs on everything and supply chains getting unpredictable, having quality gear on hand is just a smart move. Go to sat123.com and use the promo code SIMPLY with all caps, SIMPLY, SIMPLY. You'll get 15% off your entire purchase on satellite phones, solar panels, you name it. That's sat123.com, promo code SIMPLY. All right, let me address the 50K crowd for a second, because the 4-year cycle bears are out in full force. Analysts pointing at RSI levels from 2018, whatever RSI is, monthly closes on chain metrics, all saying the same thing, $50,000 Bitcoin, maybe lower. The cycle's broken. We're in a bear market. Pack it up. Here's my question. What does the data actually say? The crypto fear and greed index hit 5, as I mentioned, on February 6th. 5 out of 100, the most extreme fear reading ever recorded in history of the index. Let me put that in context. During COVID, the crash of March 2020, when the entire world shut down and Bitcoin fell 50% in 2 days, the index hit 8. During the Luna collapse that wiped out 40 billion in a week, it hit 6. During FTX, the most catastrophic exchange collapse in crypto history, 12. So February 6th, 2026, it hit 5, an all-time low. And what happened after COVID? Bitcoin ran from 3,800 to 60,000. After Luna, it ran from 17,000 to 73,000. After FTX, 15,500 to 100,000. Every time the market hit extreme fear, the people who held or bought were rewarded enormously. And this month just printed the most extreme fear ever. Might tell you something. And here's where it gets a little interesting. While your Twitter timeline was filled with 50K incoming posts, the wallets that actually hold serious Bitcoin were doing something different. This is Glassnode data. Whales, wallets holding between 1,000 and 100,000 Bitcoin, accumulated over 230,000 Bitcoin in 3 months. $15.6 billion worth of Bitcoin. On February 6th alone, the day of fear and greed index hits its all-time low. 66,940 Bitcoin flowed into accumulation addresses in one day. Your Twitter timeline is full of 50K predictions. Whale wallets are full of Bitcoin. Decide which one you want to follow. And there's a technical signal that almost nobody is talking about. Funding rates, the cost of holding leveraged long positions on exchanges, that just went deeply negative. The last time funding rates were this negative was August 2024. What happened after that? Bitcoin rallied 83% in 4 months. The perma bears aren't wrong that it feels bad. It does feel bad. But feeling and signal are two different things. When retail is this scared and whales are this active, history has a very clear answer. Even the people closest to the administration aren't worried. Eric Trump was on CNBC 5 days ago saying this.
You've been big proponents and bullish on Bitcoin as well.
We still are. I'm a huge proponent of Bitcoin. I do think it hits $1 million. I think it's one of the greatest performing asset classes. Go back 2 years. Bitcoin was at 16,000? Where is it at right now? 70?
Yeah.
Right? If you look at the last 10 years, Bitcoin has gone up 70% a year on average, year over year for the last decade. Name an asset class that has performed better than Bitcoin. And now, obviously, you have lots of volatility. If you don't want volatility, go invest in some muni. Go have a great time. Go invest in some treasury. You're going to have volatility with something that has tremendous upside. But I've never been more bullish on Bitcoin in my life. I've never been more bullish on cryptocurrency in my life.
Never been more bullish. $1 million target. And he also mentioned that every major financial institution, Fidelity, Schwab, JP Morgan, Goldman, is now in crypto. That institutional infrastructure didn't exist in 2022, so the floor is higher this cycle than any previous one. I want to talk to anyone watching this who has Bitcoin on an exchange right now. You just watched a whale get liquidated for $61 million on one exchange in 1 day this week. Exchanges are not your bank. They are not your vault. And if you don't hold your keys, you don't hold your Bitcoin. Our partners at the Bitcoin Way will walk you through self-custody step by step, safely, simply, at whatever level you're starting from. They offer a free 30-minute consultation at thebitcoinway.com/beyondbitcoin for you, those of you who are watching the show. No pressure, no pitch, just real help from people who have been doing this for years. If anything this week has made you nervous about your Bitcoin sitting on an exchange, that's the call to make. thebitcoinway.com/beyondbitcoin. Here's the part that ties everything together. And it's the part that the tariff panic crowd hasn't thought through. Tariffs are inflationary. That's not an opinion, that's economics. When you put a 15% tax on imported goods, those goods get more expensive. That's inflation. And the Fed is already running a core PCE inflation rate of 2.8%, above its 2% target. So add tariffs on top of that. The Fed can't cut rates. That would pour gasoline on inflation. And they can't raise rates forever. The economy probably wouldn't be able to handle that. So they're stuck. Does that sound familiar? And the dollar is already breaking. The DXY, the US dollar index, hit a 4-year low in January 2026. Even as it recovered slightly, the trend is clear. Faith in the dollar is eroding. And look where that money is going. Gold just crossed $5,500 an ounce, all-time high. Gold is up 8.6% since tariff fears started. Bitcoin is down 6.6% in the same window. And I know what the chart looks like. It looks bad for Bitcoin. Gold winning, Bitcoin losing, Peter Schiff popping champagne. But here's what gold traders know and haven't fully acted upon yet. Bitcoin has the same inflation hedge properties as gold, and better ones. Fixed supply of 21 million, perfectly portable, no counterparty risk, no storage fees, no confiscation risk, fully verifiable. For centuries, people ran to gold when governments debased their currencies. Now, there's an asset that does everything gold does and more. And right now, it's on sale. So go get some. JP Morgan, the bank whose CEO called Bitcoin a fraud in 2017, is now projecting $165,000 Bitcoin by the end of 2026. The reason? The debasement trade. Retail investors, as JP Morgan says, will rotate out of fiat into Bitcoin as currency debasement accelerates. That's not a Bitcoin bull saying that. That's the biggest bank in America, JP Morgan. Grayscale also published a full report on this, titled Bitcoin and the Debasement Trade. Their conclusion, the conditions that have driven Bitcoin 10x since 2020 are accelerating. They're not reversing. And then there's this. Economist Timothy Peterson tracked Bitcoin's performance going back to 2011, when at least half of the prior 2 years were positive for Bitcoin, which they were. Bitcoin traded higher 10 months later, 88% of the time. 88%. That's not a guess. That's a track record. Now let me bring it all back to today. Trump raised tariffs. Bitcoin dipped. The fear and greed index is at an all-time low. The perma bears are calling for 50K Bitcoin. And simultaneously, Saylor just did his 100th purchase. Whales accumulated 230,000 Bitcoin in 3 months. Funding rates are signaling a potential short squeeze. JP Morgan is calling for $165,000 Bitcoin by the end of the year. The dollar is weakening. Gold is surging. The legal mechanisms behind these tariffs expire in 150 days. You see where this is all going, right? Because I don't. The tariff panic didn't change Bitcoin's fundamentals. Fixed supply, 21 million, still uncensorable, still borderless, still immune to every trade war, every executive order, every Supreme Court ruling. There are no tariffs on Bitcoin. The people buying right now are the ones who understand that. They understand that Bitcoin is the answer. Before I get out of here, if you want to connect with me or the Bitcoin community at large, I'm on ClubOrange, formerly known as the Orange Pill app. The app changed its name to ClubOrange. Same community, same vibe, but just a new look. Find me, I'm at Oceans, O-S-H-I-N-S, just my name. And you can send me a message, I actually read them. If this episode hit you differently, if you've got questions, or you're just going through the tariff panic like I am and need someone to talk you off the ledge, let's get off that ledge, man. I'll be right there. I'm on cluborange.org. My handle is at Oceans, O-S-H-I-N-S. Hit me up. Here's what I want to leave you with. Every single time in Bitcoin's history, every single time, the people who were loudest about the end were the ones who sold. And the people who were the quietest, the ones loading their wallets while everyone else ran, those are the ones who changed their lives. This week, the fear and greed index hit the lowest number it has ever printed. More fearful than COVID, more fearful than FTX, the most extreme capitulation reading in the history of the index. And the whales bought $15 billion worth of Bitcoin in 3 months. Get it through your brain. Fear and conviction have never coexisted more clearly than they do right now. The question is, which one are you going to let drive your decisions? The exit from the broken system exists. It always has. It's just on sale. So go out there and study some Bitcoin. If this episode helped you cut through the noise, then hit that like button, hit that subscribe button to the Simply Bitcoin channel. Smash that notification bell so you don't miss the next one. Leave a comment below. Is 2026 the year that you finally go into self-custody? I want to know. If you want to reach out to me directly, I'm on X at RunDanceBitcoin. That's R-U-N-D-A-N-C-E, Bitcoin, B-I-T-C-O-I-N. I used to run and dance at the same time, and I also like Bitcoin, hence the name. You can come argue with me or agree. Either works. I'm Oceans. This is Beyond Bitcoin. Until next time.